Welcome back, everyone. Next up, we have LiveToBeHappy Inc. It trades on the OTC Pink sheets under the symbol CAVR and is a platform company that acquires undervalued assets and professionally manages them. Its wholly owned subsidiary, Sinacori Builders, is a residential land development and custom single and multifamily home builder in Charlotte, North Carolina. Please welcome its CEO, Kevin Cox. Welcome back, Kevin.
Thank you. I appreciate it. Glad to be back.
Good. The floor is yours.
All right. I'm going to jump in then. I appreciate it. Excited to be back today. Just to go through a couple of slides. It's been about 4 months since I presented. So this next several slides, we're going to basically talk about progress. Of course, I have to go through the cautionary statements. Please review those in the deck. We'll post the deck later, specifically as it relates to statements that we make. All right, so Live to Be Happy. Want to talk again about the mission of the company, where we're going, what we're doing, who we are. Specifically, we're a collection of lifestyle companies focused on building lives, not just places to live. We identify and acquire undervalued revenue-producing companies or products, and we professionally manage them. We build these companies and products into strong brands with the aim of delivering above market value as a result. So we've got companies in several sectors, but a common theme is that they're lifestyle companies, again, focused on building lives, not just places to live. So we've got real estate sector, small business, entrepreneurial services sector, health and wellness, education, and travel and entertainment, again, all in the lifestyle arena. So looking at the last 4 months, I really want to talk about hashtag real and hashtag progress, because in 4 months, we've made real progress. But I want to start with the concept of real. I know in a lot of emerging companies and emerging technologies, there's a lot of optimism, enthusiasm, and excitement, as there should be. But that can wane over time if there isn't real progress or the underlying message and products aren't real. So we're going to talk about that. We're going to talk about where we're at, what we have, because what we have is real revenue. We have real financials. We have audited financials. We have real potential, and we have real businesses within the company. And we've made progress in the last 4 months. Since I last had the chance to be on this conference. 4 months of progress, really. A lot of it behind the scenes because of trying to build what we're building in terms of building a substantial collection of lifestyle companies and substantial revenue and EBITDA over the long term. But we have made progress, and we are at an inflection point. Even today, we are at an inflection point where we're beginning to see and will begin to see the result of all of the effort we've made and the progress we've made in the last 4 months. So let's start with the executive team. Again, for those that are watching this the first time, I'm Kevin Cox. I have 17 years of experience at UPS in their strategy group, running several technology subsidiaries for them. I founded a company called Logistics Technologies 4.5 years ago. It took about 2 years to put the company together. We raised $50 million in working capital and in debt finance and equity finance. We acquired 8 businesses and we formed and started logistics 4 years and 7 months ago. Last month, it announced it sold. Logistics sold for $185 million to E2 Open. So we started it from scratch and turned it into a $185 million company. Grant Edwards, who I'm thrilled to have on the team, he has a great deal of experience in the public sector, specifically public reporting, auditing, and is a great asset as we begin to as we continue our progress towards uplisting and becoming a strong long-term reporting company. Russ Sinacori, our Chief Operating Officer, fantastic operator. Russ has a great deal of experience in operations outside of just building homes, also in lifestyle brands. And he's focused, determined, and a pleasure to work with. He makes sure that the clocks run on time. but doesn't do so in a hostile manner. So excited to have him on the team. Bob Silver, our executive chairman and chief innovation officer, a fantastic innovator, constantly innovating, constantly putting ideas into our incubation arena in our research and development group. He's also a fantastic promoter and has stayed true to shareholders throughout the entire process of basically taking nothing several years ago and turning it into what it is today. Dr. Stephanie Christner, we're thrilled to have her on the team. She's our medical director and a health and wellness lead for Renew You, but for all of our lifestyle companies. So it's a great team. So some other progress we've made. Again, I'm going to be highlighting some of the things that we've done differently, or some of the things that we have added to and progress that we've made. So when we look at Sean Fuller, we've brought Sean Fuller onto the team. A little bit about Sean. He was the originator of SOCU, and we have recommitted and redoubled our efforts into SOCU, and we'll be making some announcements about that over the next year. He's a emerging technologist, and I mean that in the sense that he's worked for Microsoft. He's got a great deal of experience, but more importantly, a great deal of experience in emerging technologies. We've also, into his team, we've brought on a junior developer to assist as we begin to roll out the technologies in support of our lifestyle brands. Thrilled to have Tracy Kroner with us. Tracy, incidentally, she is taking over marketing and social media. She's a full-time employee of the company. And most exciting is in Charlotte at our headquarters, she is listed as the top 30 under 30 future business leaders. She has a great deal of experience in social media. Will have a big impact on revenue and marketing and our social presence, both for the parent company and for each of our lifestyle brands. So we're excited to have her on the team. So I've highlighted some areas. I'm going to go through each company as I did last time, and kind of talk a little bit about some of the progress we've made in the last 4 months. And the Sinacori Builders front, exciting progress. Land, as you know, it's a land development and new construction. But recently we announced that we acquired HRS Construction. What I'm most excited about with HRS is they do commercial work. They're also in Charlotte. They focus on commercial work in rehabilitation of hospitality-based properties, and they will be adding quite a bit. They've got roughly 15 to 20 million in their pipeline, and I'm excited about the profit they're going to bring to the company this year. Most importantly, they're non-cyclical, so it's a diversity play for Sinacori Builders and a complementary addition. We're looking at and have published over 20 million in revenue is our forecast for 2022. That is double our revenue from 2021. Fantastic growth. So again, that's Sinacori Builders, and that's not inclusive of the additional revenue that we expect to see from HRS Construction. We still have companies under LOI in our merger and acquisition queue. We've engaged in and are just about finished with the lender selection process, and we have term sheets in place. Excited to add these companies. They as well, if we close on them, they are in the rehabilitation and emergency space, which is also non-cyclical. So we're diversifying and gearing up for the future. A few other businesses. Talk about Renew You in particular. We've made some fantastic progress at Renew You. First thing I'd like to say is they're exceeding our revenue and EBITDA projections for 2022. So we're seeing growth in that business. We now have 3 indications of interest in place for 3 different locations to add as we roll out the franchise. That's an incredible progress. We've put the operations manual is just about finished. We'll be registering the franchise disclosure document in the next several months. And then we expect to roll out our first new clinics by the end of the year at the latest. More progress on the DRIP. A couple of things here on the drip I want to add is that we're excited to have Darren Tarver committed to working with us once once we're ready to push our strategy with the drip. Darren Tarver is a fantastic gentleman. He'll be president of Drip overall. Looking forward to having him on, and we expect to have him on full time by the end of the year at the latest. The patent, we did get a patent issued. We're excited about that patent issue. It was issued April 12th of this year formally, and that is a exciting event for us on the climber. The other thing that's exciting is we've finished the initial design of our patented drip bike, and that bike, as you may recall, that is a designed by a physical therapist, invented by a physical therapist, so that those individuals that have injuries or in particular back problems will be able to get cardiovascular exercise without impacting or increasing inflammation and pain in those joints and in those areas of injury. Fantastic product, and we've made great progress, just about finished the design, which we'll be releasing soon on that. Growing Together Academy and AV Rover. As we put these two companies together, we've made progress on bringing the two companies together. I'm excited to have Toy Hirschman full-time as president of the two companies. She is already working with AV Rover. They have just recently in the pipeline over $1 million of new product in the pipeline, which would double or triple their revenue from last year. We're excited to have that. We're adding curriculum. Growing Together Academy, we're making progress on that front as well. You'll see more about that. And a few more of our lifestyle brands, including Canary Travel. They are a Fox. We've been able to re-up with Fox News, and Angie will continue, and we will continue to be the Fox News travel contributor in Ohio. And then Soku, as I mentioned at the very beginning, Sean Fuller back on the team. We have a new focus. We're focusing on a new architecture and getting geared up by the end of the year at the latest, a new launch. Final two companies on the entrepreneurial space. On the post-bid ship side, we've dramatically reduced cost by almost $100,000 a month. And we've just recently hired a sales individual who's going to start selling, and we only need 7 more clients to hit our revenue goals for 2022. So we're excited about that. Trudent, moving forward, they've brought in, I'm just looking the other day, they've brought in significant revenue. They're on running on track with our expectations, and we're thrilled to have them on the team as well. So putting it all together, we are in the process, and we've actually undergone a transformational M&A and capital raise. You'll be hearing more and more about that over the next several months. We've got the real estate portfolio that's strategically positioned to grow, but we've also began to diversify with HRS as the first and others in a manner that will help us counter any cyclical pressure. We are poised to benefit from the infrastructure spending bill that will continue pouring money into the space, and specifically infrastructure, over the next several years. We've got vertically integrated business models. We've got a strong leadership team. That is probably the most exciting part for me, the talent of people we have, along with, and again, this is #real, we've got real people, real leaders, full-time, not sitting in a closet somewhere on a computer acting like they're full-time. It's #real, real people that are real leaders doing real work. And I'm excited for the progress we're making and the progress that we will make as we add more people like Darren Tarver to the staff over time. So again, #real, #progress. We get a lot of questions about how we're proceeding in our uplist to the QB. We're making great strides. So the 2019 and 2020 audits are complete. The 2021 audit is nearing completion. We don't expect a big variance at all from the numbers that we posted a couple of weeks ago, but that audit should be complete. We have interviewed a number of people for audit committee chair. We'll be adding the audit committee, adding the compensation committee, doing the things we need to do at a board level to ensure that we're ready for the uplist to the QB. We have over 20 million in revenue forecast for 2022. Again, if you consider that 4 years ago, the company had $0 in revenue, and today we've got 20 million in revenue forecast for 2022, that is substantial progress. That's real revenue, real progress. And our EBITDA, upon closing these acquisitions, we expect to be near or above 10 million in EBITDA, resulting from all of these acquisitions. Keep in mind that that the acquisitions we made in 2021 were mostly made in December. So there was no impact or little impact on revenue and profit from those companies in 2021. We will have the entire year of 2022, and we will see the impact of revenue and EBITDA from those acquisitions. Wanted to say a couple of things before I turn it back over for questions. And one of those has to do with how we plan to proceed with our acquisitions. So I want to make it extremely clear, very clear, unequivocally clear that we have no intent to add to the float. We have no intent to add to leverage float or to add unrestricted shares as part of the equity component of future acquisitions. The majority of acquisitions we make in the future will be debt-based and restricted or preferred equity. So I just wanted to make that abundantly clear. Again, we've made fantastic progress. 4 months is to have accomplished what we've done. Actually in the last 6 months, we've acquired 5 businesses. We've started the integration of those businesses. We've doubled our revenue. We're going to exceed our revenue forecast in 2022, and we're seeing EBITDA growth is strong. And we have a lot of other things in the queue that we've been working on as a team. The first quarter of 2022 was a foundational quarter, putting the foundation in place, as I like to say it, so that we can begin to throw steel on top of it and begin to build it out. So we're ready. We're helping each of our brands grow. We've hired additional staff, and we are looking forward to generating the return that all of our shareholders expect, and that myself and others are financially vested in accomplishing. So with that, I want to make sure I leave plenty of time for questions. So I'll turn it back over to Anna.
Great. Thank you, Kevin. Okay, we got lots of questions for you. Dexter Hicks asks, how valuable do you believe the patents that were recently issued are?
Extremely. I think they're extremely valuable, but everybody would say that. Let me explain. The reason I believe it's so valuable is number one, the product itself, as we've designed it and engineered it and are preparing to roll it out, does substantial. I mean, it's just a fantastic product from a lifestyle perspective in terms of enhancing people's ability to achieve both muscular and cardiovascular progress. The other reason I believe it's valuable is because I like patents and I do good work at enforcing them over time. So I think that makes it valuable as well.
Thank you. From Philip Bowen, when do you expect the LOIs to be completed and secured?
Oh, that's a great question. So we're in the last phases of diligence with the final companies. Although we're kind of constantly adding to our pipeline, let me just say that we don't, progress doesn't stop. So we're adding more and more companies to our pipeline, though we are going to slow down and integrate the companies we have, of course. But to answer this question directly, we're in the final stages of diligence with these companies. We are in the final stages with the lenders. And so I can't give you an exact date. We were hoping for Q2. That's still possible. But we want to make sure that we dot the I's and cross the T's. Since the EBITDA here is so extensive, at over 10 million, we want to make sure that we aren't buying something that is going to cause trouble.
Makes sense. And April Warren asks, do you plan to issue unrestricted equity to fund acquisitions still in the queue?
Absolutely not.
John Castro congratulates you on the growth in sales over the past 12 months. He wants you to explain where sales could go over the next 12 months, and can you relate that to where the outstanding shares will go?
That's a great question. So we have forecasted revenue in 2022. So over the next 12 months, we're on track for conservatively 20 to 25 million. If you begin to add the components of all the businesses we've acquired, that could go north of 30. Obviously, I can't commit to that. There are a lot of things that could happen in the next year. But in terms of our actual forecast, we're forecasting 25 million plus in revenue.
Ken Kamikaze asks, when do you expect to be profitable?
We will be profitable in 2022. The profit in 2021, and let me explain, we did have gross profit in 2021. We invested a lot of expense in preparing for acquisitions, preparing for integration, getting the company ready for uplist, and preparing for and building the foundation, as I said, so we can throw steel on it. If you take those extraordinary expenses out, 2021 was a very good year. 2022, we will absolutely, unless there are, unforeseen events that we can't foresee, we will be profitable in 2022.
Great. Ray Price says you acquired a lot of companies in late 2021. Are they paying off yet? Are they helping you accomplish your mission?
They are. They're lifestyle brands. Integrating, buying businesses is tough. Integrating business is tougher. And we have some fantastic presidents of each of these divisions, and we are seeing progress. The answer to your question is, of the 5 we've acquired, I would say 3 are exceeding expectations, 1 is at expectations, and 1 is slightly below expectations. And we've just made some hires and some changes to turn that around. So, just being candid, when you integrate businesses, it isn't always easy. But the answer is, from my perspective, we're doing better than I would have expected.
Good. Gene Garza asks if you have any concern about inflation or the possibility of an upcoming recession.
Absolutely. I mean, of course, anybody that's not thinking in leadership role about interest rates going up, inflation was 8.5% for the month of March. It's the highest inflation ever. Fed's pulling dollars off the balance sheet. We've got a war in the Ukraine. That 4 months of progress I've talked about has happened in spite of a war that none of us thought would happen. So yeah, there's some headwinds, but that's why we've made some non-cyclical acquisitions. That's one of the reasons that everything we do is focused on lifestyle and not just, again, building lives, not just places to live. So the acquisitions we've made all are positioned to do well in spite of an inflationary and interest rising environment.
Good to hear. Ryan Castillo says he sees the business is doing great, but can you discuss the addition of 125 million free trading shares to the float to accommodate the acquisitions? Why were these shares not issued as restricted? And are the 125 million still being sold into the market, or have the shares been pulled? And do you see a buyback?
It's a great series of questions. There were like 4 questions in there, which is great. I'll answer them all. So number one, the reason for using unrestricted shares for making these acquisitions was because we did not want the company to take on substantial debt in advance of closing and on the debt we're going to take on for these large acquisitions. Okay. It was, from our perspective, it was going to be inhibitive of closing on the bigger deals, or is going to make it more difficult. So closing on the bigger deals is obviously our big focus and has been for the last year. Number two, we knew that although that would have a dilutive effect in the short term, we knew that we were going to buy back shares. We were going to, upon funding upon greater funding and funding of the larger acquisitions, that we'd be able to buy those shares back out. So the quick answer to the question is, we did it strategically. It had a short-term impact, and that impact will be short-term because we will be buying back those shares. We will be implementing a buyback program. We've got to go through the protocol to do that, of course. But we also will be buying out some of the acquisitions and the money that's left out there, which will put us in a position where those shares will go down dramatically. So we expect, I can't guarantee it, but I'm expecting, a significant percentage, and I mean significant percentage of those shares to go back into Treasury.
Great.
One more thing.
Yep.
And absolutely not are we going to be adding shares.
Okay.
Unrestricted shares again to fund acquisitions.
Okay, great. Allison Todd says that you have about $500K in the coffers. Can you discuss how much money you'll be raising over the next 12 months?
So there's how much do we want to raise and how much can we raise? Those are two different questions. I'd like to raise $100 million, but I don't think we're going to be able to. Realistically, our goal is to raise anywhere from $2 to $50 million over the next 12 months to fund the expansion of each of our lifestyle brands. When you look at Renew You and wanting to fund our vision of getting to 100 locations, when you look at the drip climber and our vision of seeing those drip climbers in exercise facilities across the country, when you look at the drip bike and us wanting to see those in physical therapy complexes and practices all over the country, when you look at Growing Together Academy and AV Rover and wanting to have AV Rover broadcast stations in homes and in schools and in communities across the country, when you look at the communities we're building and the lives we're impacting and building lives, not just places to live, we want to raise money that's smart. We want to raise money in a way that's effective. And we want to raise money so that we can accomplish the goals that each of these companies have. And of course, to produce a return. As I mentioned, when I did logistics, the first 2 years, it took 2 years to put it all in place, to put our foundation in place. We started throwing steel on it 4 years and 7 months ago, and we produced a 7 times roughly in return for investors. I mean, I'm thrilled that we should be in a position to do it here. We raised $50 million at logistics. Again, I talk about $100 million, but since you put the little time frame of 12 to 13 months, I'm going to say 5 to 50.
Okay. Last question, probably due to time. Casey Markey asks, did any of the common shares owned by Silver or Sinacori get converted into preferred shares? That's question one.
It's a great question. So Russ Sinacori did convert a portion of his share, I think most of his shares, into preferred. And I believe Bob has started that process as well. So both of them will have a significant holding in the preferred bucket, and those shares will have been pulled out of the unrestricted common.
Next question from Casey. Given the current price per share, are you concerned about not being able to meet the requirements to uplist to OTCQB, which is 1 penny for 30 days prior?
No. Again, if you'd asked me 4 months ago, would Russia be in a full-scale war with Ukraine, interest rates be going up and inflation growing at 8.5%, I would have said no. So, I can't predict the future, obviously. But I can tell you, again, going back to #real, #progress, we are making real progress and we are producing real results, real revenue, and shareholders that understand how companies grow over time and how companies go from micro cap to large cap, we'll see that we are doing everything that you're supposed to do to make that happen. So I do not expect it to impact our ability to uplist at all. And if the real question is, are we doing a reverse in the short term? Absolutely not.
Okay. Well, you did answer a few more questions about the reverse. We are out of time. This is a thrilling venture you guys have. Thank you so much for joining us, and come back in the near future with some more updates, Kevin. Thank you for your time and presentation today.
Appreciate it, Anna. Thanks.
All right. Okay, everyone, stay with us. We have another presentation coming up in just a second. We'll be right back.